Here guys, so in today's video I wanted to talk to you and break down this beautiful 1 to 4 risk to reward trade that we took on GU, which actually ended up turning into a 1 to 6 risk to reward trade because we ended up adding another position on top where we stacked another position on, which gave us an additional 2%, giving us a net positive of 6% on these two trades. Now they were both taken on GU and they were following a simple market structure and adding in our Judas swing confluences. So let's jump straight into it so I can break these down for you. However, I just wanted to touch quickly on the side that every week I do send out a weekly outlook for everyone in the Discord. And as we can see, the weekly outlook that I sent following for the week commencing on the 3rd until the 7th of June, I actually marked out the analysis for GU. And as we can see, if we go back onto the chart, this white line is before the week actually commenced. Now, as we can see, I highlighted that we wanted to see this sort of bullish price action trying to reach the Pico top. And as we can see right here, we ended up getting that higher low and then that higher high reaching for the extremes of that zone. So as you can see, every week we are analyzing the markets together in the VIP group. And if you're not part of the VIP, then I would highly suggest going down in the description and clicking the link to become part of the community today. But without wasting too much time, let's jump straight into the analysis of this GU trade. Now, first and foremost, what we have to do is understand where we are in terms of our market structure. So if I replay the chart right here so that we can start off fresh on a Monday, we've come onto our charts and what we've done is we've identified key areas in the market that price can return to. Now, immediately what we can notice is that price is bullish, right? We've got a series of higher highs, higher lows, higher high, higher low, and this newly printed higher high. So now, after we get a higher high, our anticipation in terms of order flow is that we get a higher low and then a continuation of the pro trend to give us a brand new higher high. Now, with that in mind, because we know we are bullish and we very clearly just broken structure to the upside, our next call to action is to identify key areas that price can actually reverse from. Now, as you can see, I've just identified this beautiful fair value gap that we've left on the 4 hourly. And this was a very key point of interest that we were monitoring within the VIP group. So what we did is we took our GAN box and we actually measured out the 50% of this range, because that is exactly where we want to be looking so that we are in the discount of this fair value gap. So once we had this identified, it was just a simple case of really just sitting on our hands and waiting for price to actually come back into this zone so that we could then start to look for an entry. So if we now play price on, what we can see is that price came into our zone on Tuesday and it gave us this beautiful reaction. So if I actually play one bar back so that we can actually drop down to the lower time frames so that we can actually see what happens when price comes into our zone. Now, when I play price on, what we can see is that the new day has just kicked in and we've started to build up the Asia session. Now, what we're doing with this trade is we're stacking a bunch of confluences onto each other so that we can have a higher probability trade. So first and foremost, we've got our higher time frame area of interest. So we've got our 4 hourly fair value gap that we've identified where we want price to come into before we start looking for any sort of trade. So immediately we've got a higher point of interest, a higher time frame point of interest that we're anticipating price to tap into. Now, secondly, what we're also doing is we're also identifying where the Asia range is. Now, I'm sure all of you guys are aware that my favorite go-to trading strategy is the Judas swing. And the simplest way to tell you about the Judas swing is that we wait for a sweep of either the high or the low, and then we for a market structure shift so that we can then take price to the opposing liquidity. So now in this case, if we now start to identify where the Asia range is, then we can get a better understanding of exactly what it is that I'm talking about. Now, for me, I mark out my Asia session range between the times of midnight and 7 a.m. UK time. So this is the highest point between that time zone. This is the Asia high because it was the highest point between midnight and 7 a.m. UK time. And if we actually go bang on to 7 o'clock, this is the 7 o'clock candle, then we can see that this was now our Asia low. Therefore, anything that happened in between these two ranges of price is now our liquidity. And therefore, what we want to do is now wait for price to actually sweep this liquidity. So what we can now see is that price has swept the Asia low, as it did right here. And now that we've swept the Asia low, we're now going to wait for price to actually come and tap at least the 50% of this fair value gap, because now we've just added an extra step to our confluence. So we've got a sweep of the Asia low, and we're in line with the higher time frame trend direction, which is bullish. So it's good to see that we've swept the low, because we want to take price in the opposite direction to the Asia high, which would mean we are in buyers, which would mean we are in line with the higher time frame trend. So now we've got our higher time frame trend aligning with the sweep of the Asia low. So if I quickly remove this to clean up the chart a little bit, we've now got our confluences lining up. So now what we next wait for is price to tap at least the 50% of this fair value gap, so that we can then start to look for market structure shifts, so that we can then enter into this trade. So again, if I play price on, which I've just done completely wrong. So if I take price back just a little bit, here we go. So if I play price on, what we can see is that price comes and it taps that 50% absolutely beautifully. And then from there, what we can see is that our structure is now like this. We've got a lower low, lower high, lower low, lower high, and a lower low. Therefore, in order for us to get a market structure shift, we would have to break above this previous lower high, so that price can give us a brand new higher high. And then from there, we can take an entry at the higher low to take price up to the next higher high. Nice and simple. That is our entry criteria. And that is just one of the entry criteria we use within the VIP. But that was the specific one we were looking for on this trade on this specific day. So as soon as we see that happen, we can then start to enter into this trade. And as we can see, price wicks above right here, but it doesn't close with a body. And if there's no body closure, then for me, that's not a market structure shift. That is just a sweep of liquidity. Therefore, until now, we are still sat on our hands and we're not doing anything, because we haven't got a market structure shift yet. And there we go. Now we finally get our market structure shift. And now this signifies to us that the trend has now flipped from bearish to bullish. So now that we know that trend has flipped from bearish to bullish, what we can now do is identify an area of interest on the 5-minute where we can potentially take our entry from. Now, this is the area that I identified for the VIP group. And the simple reason for this is because if I remove this box really quickly, what we can see is that we had this buildup of liquidity right here. Price then came and swept that liquidity. And then we got this market structure shift. Therefore, right here, we had this accumulation, manipulation, and then distribution. So because we had this playing out right here, I was very interested in taking an entry from this candle right here. So then once we've identified our entry area, we can then put our entry at the open. Stops go just below the low. And in this case, we were actually initially targeting the high. We wanted to target a brand new higher high being put into place. And that would have given us a beautiful 1-to-7 risk to reward trade. So if I actually go back and play price on and we identify what happened. So as we can see right here, we had the entry at that area. We've just had the market structure shift, and I told everyone to enter into a GU buy limit, stop loss, take profit, so that we can then take price higher. So now that we've got everything in place, we've identified our area of interest, we've put in our entries, we can now simply just sit back and wait. So as we can see, price then taps into this area right here, and then slowly we start to move. Now, right here, we did also have news. And as you can see right here, I told everyone to go break even because we had news in 10 minutes and you never really want to play with news. So we put our stops to break even. And as you can see right here, the break even just got missed by a hair. And that was amazing to see that we were still in this trade because we were just missed on that break even. But after that, price then continues to move up. And as we can see, we are slowly and steadily moving towards our take profit. Now, this trade was a bit of a longer trade. We was in this for an entire 24 hours because price did move a little bit slower. And as you can see, we're now slowly approaching the end of New York. From there, we do get a little reversal and price does come back down just a little bit. So I told everyone to remove the break even. I also said remove the stop losses as we will have the spread hour coming back into play. So because we've got spread hour, I told everyone to remove the stops so that we can then be safe when spread hour kicks in and we get the haywire of spread from these different brokers. So from there, we've had all of this happen. Now we've kicked into the Asia session. So we've woken up and I've told everyone to also remove the stops because we are now building the Asia session again. However, we are still inside of this trade. So what I did is I identified another area in the market that price could potentially retrace from. Now, initially, we had price tap into this supply zone up here that I'm going to mark out just like this. If I remove this, there we go. Perfect. So price initially tapped into this supply zone up here. From there, we had this crazy reversal, and then price slowly started to move away. So when I saw this, I told everyone to actually reduce their stops down just a little bit to cover this wick because we wanted to make sure that we could take some profits. You know, we didn't want to let price go break us even after we've run up 4% in profit. We didn't want to then give it back to the market or not take anything away. So I told everyone to move their take profit down just a little bit. And whilst I'm telling everyone to take their take profits down, what we're doing is we're actually building the Asia range. So all of this has now become the Asia session range. So if I actually, again, mark it all out, the Asia range is the time between midnight and 7 a.m. UK time. So if I find midnight, then we can see that this is the highest point within the Asia session range. And now if I go over to 7 a.m., then right here we've got the lowest point of the Asia session range. So in between this time, we've got our Asia session high and our Asia session low. So because we've got our Asia high and low marked out now, what we can do is actually drop down to the 5 minute and we can now potentially start to look for entries for a secondary position on GU. So what we can see right here is that price sweeps the Asia low. And then after sweeping the Asia low, we actually get this beautiful market structure shift. So once we get this market structure shift, as we can see right here, I told everyone that we are going to be stacking another position on, and we are going to be taking a second position on the already running GU trade from this order block right here. So then we put our entries right there, stops just below the low, and then we were simply just targeting the opposing liquidity, which was a 1 to 2. As we can see right here, it was a trade like this. Perfect. So that was the trade that we stacked onto the initial trade. And as we can see, price comes back, taps us in, and then just runs straight to take profit. That is it. Nice and simple. Hits our take profit, and we are done. So that's 2% secured, whilst we're also in this original trade, which is currently running around 2%. So from there, price then does chop around for a little while, and then eventually it goes up and it hits our take profit. Perfect. We had 4% on the initial trade and then the additional 2% on the secondary trade. So that's 6% in 2 days on 2 trades on GU. Now, both trades followed the exact same strategy, and that was the Judah swing framework mixed in with a little bit of higher time frame biases and understanding the trend. Now, this was the trade that I sent to everyone within the Discord. And as we can see right here, both trades were closed out. And again, if you're not part of the VIP group, then I would highly suggest going down in the description and clicking that link to become part of the community, because we take high level trades like this near enough every single day. And I'm always sending my market outlooks and some education every time we have some time in the VIP group. But I hope you guys enjoyed this video and got some understanding of how to structure your trades in line with the higher time frame bias. And on that note, guys, I hope everyone has had a great weekend, and I wish you a profitable trading week. I'll see you in the next video.